China has come up with the Belt and Road Initiative sort of line, which has gained a lot of traction over the last 6 years or so. I mean, actually, when we look at what countries spend on international development and investment combined, and the G7 is way ahead of China. A lot of what the G7 give to developing countries is, in fact, grants and aid and concessional lending, whereas what China gives under the BRI is much more lending rather than grants and at commercial rates rather than at concessional rates. So in a sense, it's already true that the G7 is doing more for developing markets than China is. However, they have been much less effective at the geopolitics of it and in sort of getting a political bang for their buck in wrapping it up in terms of one individual program. So there's a lot they could do with that firepower, but the challenge for the G7 is that it's 7 countries and then also having to coordinate with related institutions like the EU and other allies like Australia. That's more complex than if you're one jurisdiction like China with very strong levers of state-directed control.
Absolutely, and without putting a too fine a point to it, they're also democracies, which means that everything has to be, talked about, compromised, agreed to. These things take time, whereas China, when it sets its mind to something, just puts it into action. Which brings me to my next point. There's nothing like competition to spur one into action, considering that some of the BRI initiatives have either been shelved or had some setbacks or just stalled a little bit. Might this actually really spur China into ramping up its BRI?
I think the BRI is in a holding pattern at the moment. It's sort of had its, golden age if you were a recipient, not so much if you were a Chinese firm investing kind of 3-4 years ago, where there was just huge amounts of cash sloshing around going into anything. And the rates of outbound capital flow were quite large. Since then, a few things have happened. And of course, China has been burned in a number of locations. A few of its African projects, most famously, have gone haywire. Also, a lot of countries were badly affected by COVID-19. So commercial considerations are now a bit higher up on the Chinese agenda, particularly when we see that there had been a shortage of domestic capital within China, high rates of indebtedness in the banking sector. So kind of more of a need for capital at home rather than sending abroad. The government started to crack down, particularly on projects in the services sector. So things like football clubs or entertainment facilities or assets, focusing more on hard infrastructure, though digital and tech is an exception to that. A lot of the Chinese money flowing out, going to places where it's more commercially advantageous. It's why we see most BRI going into Southeast Asia. That's really the crux of this, where I think competition between China and the West is going to intensify in the years ahead.